From the world of politics.
January 6th was the culmination of an attempted coup, a brazen attempt to overthrow the government.
To the world of business.
One of the benefits of this period of higher inflation is going to be that we can start to close some of the wage gap and help the people at the bottom catch up.
This is Balance of Power with David Westin.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome now to Balance of Power. Consumer numbers out this morning have the markets reeling as the inflation story continues. Here to take us through those numbers is Bloomberg International Economics and Policy Correspondent Michael McKee. So I'm not sure if we were looking for relief from inflation, we got much today, Mike.
We didn't get much today, and speaking of reeling, they've got to be doing that down at the White House because these are particularly bad numbers for Joe Biden. Energy up by 4.1%. That's the gasoline price increase, and almost 49% over the course of a year. And the problem is there isn't a whole lot they can do about it. Food prices are up. And while we see demand destruction when the Fed raises interest rates for other categories, people don't stop eating. So food prices are going to play a big role going forward. Some of the other categories that were up big, owner's equivalent rent, that's the way they measure home prices. And those just continue to rise because we've seen a lot of strength in the real estate industry. Now the question is, as sales fall off, as mortgage rates rise, do we see that start to lighten up a bit? There hasn't been any indication so far yet. And then used cars, airfares, those are things that have been a problem all along. So for the president and his campaign buddies on the Democratic side in this midterm election, they have to be worried. You saw after the CPI come out, the University of Michigan numbers set a record low. That's kind of hard for me to believe given that we've had a lot of problems in the economy in the past. But I think the overall speed of the increase in inflation has really shocked people, and they are not happy about it right now. Question then becomes, what does the Fed do about it at their meeting next Wednesday? All of a sudden, we're hearing a lot of talk from Wall Street about a 75 basis point move. Now, they don't usually like to surprise the markets, but the markets seem to be giving them their permission to do it because they've priced in at least a 50% chance of going 75.
Yeah, we talked to Larry Summers of Harvard a little earlier today, and what he was saying is don't forget about 25 versus 50. We got to go to 75. That's what he agreed with. Thank you so much to Bloomberg's Michael McKee for that report on those CPI numbers. And now for a review from an economist, we turn to Allison Boxer. She's an economist with PIMCO. Allison, thanks very much. Is there any good news in these numbers if we're looking for inflation to slow down or even diminish?
Thanks for having me. Yeah, I think the news from the inflation report this morning was not just about the magnitude of the surprise that we saw, but also the details. I think the real challenge and the real story that we saw in terms of core inflation was the fact that we saw rental measures of inflation really accelerate relative to last month. I think this is really challenging, not just for the Fed, for politicians, but also for the U.S. economy more broadly, is that these measures tend to be really sticky. We tend to see that changes in housing markets or the economy more broadly really only impact rents with a lag. So I think this raises, significant questions as we think about the outlook. If this type of inflation, sticks around, what does that mean for the Fed and for the economy more broadly?
Allison, how broad is the inflation? Because if we go back a year or so, as I recall, we were hearing from people from the Fed as well as the administration this is fairly narrow. It's specific areas that are affected by the pandemic. How broad is this inflation at this point?
Yeah, I think what we've seen year to date is certainly that drivers of inflation have broadened out, rents in particular being sort of a key source. But I think it is important to take a step back and note that we are still seeing some pandemic effects. As we look across inflation, we're certainly seeing effects on commodity prices from sort of the broader global geopolitical situation, war in Europe, and things like that. So certainly, I would say that inflation has broadened out. But I do think, you also have to take a step back and keep in mind that, we are seeing disruptions, pandemic effects still today.
Well, what about the war? Because that's something that President Biden has referred to several times. That affects, as you just suggested, some commodities. Does it have broader effects on inflation, or are there other factors at play?
Yeah, absolutely. I mean, I think we saw that very clearly this morning, and we've seen it really in the past several months. Not just inflationary pressures coming from higher commodity prices, but I also think a lot of uncertainty and a lot of volatility in the inflation, coming from these issues. In terms of whether that sort of spreads more broadly, I think the important thing to keep in mind is really where we're seeing inflation today is in these sort of essential categories, rents, as we've discussed, energy prices, food prices. And that starts to eat into consumers' real incomes, into their disposable income to spend on other categories. So certainly I think we can see, some of the sort of commodity-specific issues that we're seeing today, some of this volatility, start to be a broader problem for the U.S. economy, in the coming quarters.
We are told, Allison, by economists such as you, that inflation expectations are critical here, that if they become, as they say, unanchored, we have a problem. Do we have any indication yet that might be happening?
I think I certainly would agree. I think inflation expectations are really key, and we've heard Fed officials really consistently over the past year sort of guide to the fact that this is really key in their watching of inflation. I think we got sort of mixed messages today. So if you look at sort of longer run measures of inflation expectations, we did see this tick a little bit higher in the University of Michigan data that we saw this morning. But if you look at sort of a broader, sort of consumer surveys plus market-based measures and professional forecasters measures, it doesn't look like we've seen significant unanchoring. But certainly, I think this is a risk given how high food and energy prices are, and something that's really critical as we think about the Fed outlook as well.
If we go back again a year or more ago, we were told by the Fed chair, Jay Powell, that if inflation does kick in, that is the Fed, has the tools to do with it. Do we have an indication those tools are working yet? And what does that tell us about what the Fed might have to do next?
Yeah, absolutely. I mean, I think the Fed has sort of a broad menu of hawkish tools that they can use, not just next week, but also going forward to sort of address inflation. I think certainly this inflation expectations issue, does suggest that, that at least the good news is this hasn't become, super unanchored on the upside. But certainly, I think the Fed has more to do in the coming weeks and in the coming months, to address this problem, just given how high and how far from target we are on inflation at this point.
Allison, do economists have a sense of whether the important thing is the rate of increase or the ultimate terminal rate that you get to for the rates? Because it's one thing to say we got to hike faster. Does this affect potentially where they end up as well?
Yeah, I think this is a really key debate. The question being, the financial conditions tightening that we've seen year to date. Is it sort of about the level or the amount of tightening that we've seen? I think the ultimate answer is it's probably a little bit of a mix of both. But I think it is important to keep in mind, as we think about how much financial conditions have tightened this year, how sort of quickly the Fed has shifted towards a much faster rate hiking cycle. This is not something that we've seen in the past several cycles. This is sort of much more rapid financial conditions tightening than we're all used to and than the economy is used to. So I think over time, we are going to see this slow growth. And that's something that the Fed's going to have to take into consideration as we get towards, the later part of this year.
So, Allison, to wrap this up, that seems to be a key question. Should we be more patient because what's working will work, it's just going to take longer? Or should we begin to get concerned that, in fact, the tools aren't working at all?
Yeah, so I mean, I think we sort of think about it as a little bit of a tug of war between, higher inflation versus lower growth. And I think the period we're in right now in terms of the Fed outlook is really just sort of solely focused on inflation. Inflation is just uncomfortably hot. There's risk to inflation expectations. So they're really going to lean on that for now. But I think, over time, as the economy slows, if we were to see inflation come down, I think that's when the Fed, can start to think about, the unemployment part of their mandate, think about growth as well. But again, I think for right now, very much in this inflation versus growth trade-off, the Fed has to focus on inflation.
Okay, Allison, this has been very helpful. Thank you for your time today. That's PIMCO's Allison Boxer. Coming up, we're going to welcome Congressman French Hill of Arkansas to our New York studios right here for his views on the economy and the January 6th committee hearings. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We want to keep you up to date with news from all around the world. For that, we turn to Ritika Gupta here with the first word.
Thanks, David. Baltic leaders lashed out at Russian President Vladimir Putin for comments suggesting that his war aims compared with his nation's 18th century imperial expansionism under Tsar Peter the Great. Russian troops are fighting to tighten control over Ukraine's eastern Donbass region, where Kremlin-led forces have made steady progress in recent weeks. Meanwhile, Ukraine's finance minister tells Bloomberg Radio the country urgently needs a new International Monetary Fund loan. This comes as efforts to fight off invading Russian forces stretch its budget to the limit. Data shows its economy shrank by almost a fifth in the first quarter, the most since 2015 after Russia annexed Crimea. The Biden administration is lifting its requirement that international travelers test negative for coronavirus before flying to the U.S. The change comes amid pressure from airlines that viewed the measure as excessive and blamed it for depressing ticket purchases. A senior administration official says the change will take effect just after midnight on June the 12th. And Colombia's presidential race is too close to call, according to a new poll 9 days ahead of a runoff between construction magnate and a leftist senator. Rodolfo Hernandez surprised many by making it to this month's second round with 48% of voter intention. That is compared to 47% for Gustavo Petro. The gap between the two candidates is less than the margin of error, meaning they are technically tied. The nation will be holding that second presidential vote on June the 19th. And Brazil President Jair Bolsonaro says he'll leave the government in a democratic way, adding he expects the October presidential elections to be clean, transparent and auditable. Bolsonaro frequently raised questions about Brazil's electronic voting system. He made the comments after a bilateral meeting with President Biden over in Los Angeles. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thank you so much. So last night at 8 p.m. Eastern Time, we had the first installment of that select committee from the House of Representatives investigating what happened on January 6th of last year, that invasion of the Capitol. And I will say, just as a former TV producer person, that it was well produced. And the question is what we learned from it all. For his sense of what we learned, we turn now to Representative French Hill, Republican of Arkansas, who serves on the House Financial Services Committee. So first of all, welcome to New York. Great to have you here.
Thank you, David.
So what did you take away, and what do you think the American people took away from what we saw? Now, this is the first of 6, but what did you take away from last night?
Well, I wish Speaker Pelosi had agreed to truly a bipartisan, equal commission to look at the reasons why the security of the Capitol was breached and not well handled. And I thought that came out last night. You know, President Trump had authorized the National Guard to protect D.C., but that request had been turned down by the Sergeant at Arms at the Capitol. And that's a key question I thought was raised last night. But it would really be good, in my view, if we were having hearings on inflation and things that Americans in my district are really talking about. So that was my initial reaction to what I saw last night.
I absolutely want to get to inflation with you here, but just before we do that, you, as I recall, did back a bipartisan commission to look into this because you thought we needed to know what really happened. Given what we're seeing so far, do you think we still need that commission? Is it too late?
Well, look, I think the Senate report that I read just around the time of voting for the bipartisan commission indicated to me that we had a real security management problem at the Capitol. And that's the responsibility of the Speaker. And so that's why I did support the bipartisan commission. But that's not what was happening. It was rejected by the Senate. And we got this partisan committee that's been set up by Speaker Pelosi. And very importantly, the Speaker's office, her emails, her direction on that day of January 6th are not permitted for discovery by the committee that she set up. So we do need to see what the result of it are, but from talking to people in my district, they're more concerned about some of these other pressing issues in the country.
So watching that last night, I must say I was struck. It's different from some of the other hearings I remember. I'm old enough to remember Watergate, actually. Right. I was in college at the time, but certainly Clarence Thomas and Anita Hill, things like that, because there wasn't much back and forth, let's figure out what's happening. It was more a presentation of a point of view. Is there some benefit to having that presentation? What do you think people are taking away?
Well, a lot of this has been covered by all the major networks, HBO and others that have carried on long discussions about what happened on January 6th, the tragedy of that event, the horror of that event. And it was so appalling what happened on January 6th. So it was highly produced, people reading teleprompters and really kind of giving you a book report of what they've heard over the last few months. So I don't know so far if it's adding any news or adding any important material to something that we've already read or seen previously.
Any chance we could put the Stop the Steal behind us and just get on with business and go to the next election?
I do think that would be important. Look, I was disappointed President Trump didn't win the election, but he didn't. And so we need to move forward and think about what we should be doing as Republicans if we're put in charge and have the blessing of leading the House next year, and focus on how we will lead the House and what the policies and priorities of Republicans will be to help fight inflation, secure the border, and get our economy moving again.
So let's talk about that economy and let's talk about that inflation. We had those CPI numbers out today, which some people are finding alarming. The markets certainly are reacting to them. I mean, one of the great advantages of having you here is you're not only a congressman, but you were a senior executive in the senior official in the Treasury Department under George Herbert Walker Bush, also built your own bank back in Arkansas. What do you make of the economy right now and the inflation situation?
Well, it's a great time to be looking for a job because there are 12 million job openings, but our families are hurting, and that's what I hear about when I'm home in my district in Arkansas. You know, a family right now, due to this inflation spike, over 8% consistently, the highest in 40 years. The last time it was this high, working 9 to 5 was on the top of the charts, so it's been a long time ago. It's costing an average family, $450 more per month for gas and food and groceries for their family. So this is having a big impact on our families on fixed income and our hardworking people. And so it's a challenge. And I think that's where we're in sort of that very strange economy where we have high inflation. People haven't seen it in 40 years, and it's causing their rent, their mortgage, their groceries, their gas. And that goes into everything because producer prices recently were as high as 11%. And so high oil and gas prices produce higher products across the board. And so our families are hurting out there, and I think it shows in the statistics, and I think it shows in President Biden's approval rating.
So the question is, what do we do about it? And maybe as important, who should do something about it? Is it up to the administration? Is it up to the Fed? Or by the way, what could the Republicans do? I mean, you're a Republican. What would you do? If you could do anything you want right now to address that inflation, what would you do?
I think there are three things that we should be doing. One, the Fed should begin to shrink its balance sheet and raise interest rates, which it's been doing, but it's over a year late, and that contributed to this inflation, and I think Jay Powell has acknowledged that. Secondly, we should not be spending money like drunken sailors in Washington, and that's been the proposal of the Biden administration to get out of inflation by spending more money. And even though Joe Biden last week suggested in the Oval Office that he wanted the Fed to have the authority to do his job, next week on the House floor, we're going to add a new mandate to the Fed. House Democrats, led by Maxine Waters, are proposing to have racial equity as a new mandate for the Fed. That takes their eye off the ball of curtailing inflation. And finally, what we need to do, David, is open up the supply side after all this demand stimulus. And that means we get people back to work, truck drivers back to work, unleash American energy so that energy prices fall and that we can get more things to the store shelves in a more cheap and effective way. So there are a lot of things that we could do on the supply side, but the cause of this inflation, in my view, principally is demand-side stimulus, too much loose policy from the Fed and too much fiscal stimulus from the central government.
You say we're spending money like a drunken sailor in Washington these days. Republicans have spent a fair amount of money as well. They tend to do it a different way. They may not have big programs. They tend to cut taxes. Is what is good for the goose good for the gander?
Yeah, let me report to you that the Trump Tax Cuts and Jobs Act produced over $1 trillion of money coming to the United States, and corporate tax revenues are up. They're at record highs right now. We have more money coming in from corporate taxes than in American history. So we don't have a revenue problem in this country. We have a spending problem. And yes, we spent money during the pandemic, $6 trillion. And since that time, Republicans have been trying to press Democrats to get back to pre-pandemic spending priorities.
Just one point on that. Okay, fine, revenues are up, but at the same time, the deficit went up under President Trump. It did not go down.
Right. That's true. It went up because he was spending a lot of time rebuilding our American defense after the bad cuts of 8 years of the Obama administration. And when you rebuild American defense, that's a priority of Republicans. The domestic spending goes up as well because Democrats want that in the compromise. Final comment. Our mandatory spending programs like Social Security, Medicaid are growing at 6% per year. That's unsustainable.
Yeah, good luck to you on addressing those
Thank you very
entitlements. I mean, everybody talks
You
about
bet.
that, but nobody gets it done, in my experience.
You bet. It's hard work, but we've got to do that, and that's something that takes bipartisan consensus.
That sounds right to me. Thank you so much. It's
You
really
bet,
a pleasure to have you with us.
Great to be with you.
That is Representative French Hill, Republican of Arkansas. Still to come, Chair of the Council of Economic Advisors, Cecilia Rouse, for the White House views on those CPI numbers released earlier today. This is Balance of Power on Bloomberg Television and on radio.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We started this program by saying that the markets were reeling from those CPI numbers, and now we get to find out just how much they are reeling. Abigail Doolittle is here with that story. Well, I don't know where to start, Abigail.
It's hard to know. It's unbelievable, the reaction that we're seeing to that hot print. The S&P 500 right now down 2.7%, the NASDAQ 100 down 3.5%. But the bigger story, yields absolutely surging higher. The 2-year yield right now at 303, essentially.
Wow.
Its highest level, I believe, since 2008, June of 2008. And if you can imagine, the 30-year yield is at 323. So this curve is so flat at this point. Of course, the 210, the way that you would look at it more traditionally, it flattened. It has flattened. It inverted, as you know, in early April. Who knows? Maybe we're going to see it invert again. And that's not great because it tells you have a super hot economy in some ways and the slowing ahead. And of course, that potential recession.
Yeah, and tech is getting hit here in the NASDAQ. It's about 3.5% down, but still 3.5 compared to 2.8 isn't that big a difference.
Yeah, I mean,
S&P's down 2.8.
Yeah, either way, stocks are tumbling. And something interesting on it all week, because this is, of course, the worst week since January. This is the third down day in a row. Today, it's on volume. Before it had been on 25% below volume. Today it's on 6% above volume. But yeah, to your point, it's just a very bearish reaction. It's so bearish, in fact, David, that you have oil, which is a risk asset, and also a tell on inflation. So here we have this huge reading on inflation. Oil's down more than 1%. That could have something to do with the dollar being up for a third day, its best 3 days in more than a year. And of course, the Fed can't do much about energy and food.
I was going to say, you always say it's all about the Fed. So balls over to the Fed. What do they do with it?
Well, you know, it's interesting because a couple months ago I said that, I'm just getting a lot of things wrong here. A couple months ago I said that the Fed doesn't make mistakes. Right now it's hard to believe that they're not really behind the curve. I mean, that's at least what yields are telling you, backing up in this way on top of the year. But they, of course, again, don't have control over energy.
You don't get that much wrong. You used to say we'd get to 2 on the 10-year. We got there.
We got there.
We passed there. Thank you so much to Bloomberg's Abigail Doolittle. Coming up, we're going to ask President Biden's lead economic advisor, Cecilia Rouse, about those CPI numbers. That's next on Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We want to keep you up to date with news from all around the world. For that, we turn to Ritika Gupta here with the first word.
Thanks, David. Lawyers for members of the right-wing Proud Boys accuse the U.S. of bringing new charges against their clients to coincide with televised congressional hearings on the Capitol riot. Monday, federal prosecutors added seditious conspiracy against 5 members of the group. The charges amongst the most serious brought in the government's massive case over the effort to thwart Joe Biden's election as president and keep Donald Trump in power. Pope Francis has cancelled a planned trip to Africa in July. The Vatican says doctors requested he remain in Rome due to ongoing knee problems. The move has raised further questions about the health and mobility of the 85-year-old pontiff. He has used a wheelchair for about a month due to strained ligaments in his right knee. California fire officials say PG&E should have removed a visibly damaged tree that fell into one of the utility's power lines and sparked the second largest wildfire in state history. An investigative report on the Dixie Fire found it would not have started if the decaying Douglas fir tree that toppled into electric wire had been identified by the utility inspectors. Nearly 1 million acres were charred. And record heat will sear down across California and the Southwest through the weekend before pushing east into Texas and the southern Great Plains. So far this month, the Permian Basin in Texas topped 100 degrees 3 times. Houston has opened cooling centers as temperatures are expected to hit 99 degrees today and 100 tomorrow. The National Weather Service also warning dust from Africa's Saharan desert will drape itself across Houston and East Texas, turning skies a milky gray, keeping temperatures high and making allergies worse. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thank you so much, Ritika. Well, we had those CPI numbers this morning, and certainly the markets were surprised by how hot they were. And so now we turn to someone who really is responsible for explaining them to the President of the United States. She's Dr. Cecilia Rouse. She's chair of the President's Council of Economic Advisors. Dr. Rouse, thank you so much for being with us. Let me start with the most basic question here. The markets certainly were surprised. Were you surprised by how hot these numbers were?
Well, look, we understand that inflation is a global challenge right now as we knit our economies back together after this pandemic and given the war, Russia's war against Ukraine. So we expected them to be elevated. Forecasting is really difficult at this time. And what we could see is in the month-on-month increase in headline, which was about 1%, about 50% of that was due to food and energy. And my understanding is really difficult to forecast price increases, changes in prices, and that's really what was challenging for forecasters. But look, the president understands that prices are a challenge, which is why he's focused on it every day.
Dr. Rouse, as you say, it's really hard to forecast. I certainly wouldn't want to try to do that. I would be no good at it whatsoever. But as you look forward and as you advise the president, do you see any prospect of a significant cooling of inflation before November? And I picked that date perhaps at random, perhaps because they're midterms.
So what we understand is that, again, as we just pointed out, especially month on month, the headline inflation, which includes fuel and food, is our biggest challenge. We understand that even core inflation was broad-based, and some of that is actually due to energy costs, which bleed into many other factors, and the fact that we are coming out of a global pandemic. I am optimistic that we will see some cooling of inflation. I am not going to forecast exactly what the numbers will be and how fast. But we see supply chains getting better. We see, the throughput getting better. We see consumption patterns renormalizing, which will put some pressure on services. But nonetheless, we see a rebalancing, which I think will be healthy for price stability as well. Importantly, the Fed is also focused on inflation. That's part of their dual mandate: price stability, full employment. The president is giving them the space to do what they need to do. And we can, part of the market's reaction is they're expecting the Fed to actually take that charge seriously, which will also generate some cooling.
We all have to have faith in the Fed, after all, because as you suggest, the president has said it's really their responsibility. At the same time, the Fed has been off in some fairly substantial ways. I talked earlier today with somebody you know well, a former colleague, Larry Summers of Harvard, and he had some harsh words for the Fed's projections so far. This is part of what he had to say.
I think the Fed's forecast from March saying that inflation would be coming down to the 2s by the end of the year was frankly delusional when issued, and looks even more ridiculous today.
So, Dr. Rouse, is that a fair characterization? And perhaps beyond what happened in the past, does it raise questions about how confident we can be going forward that the Fed has their arms around this problem?
Look, I am not going to, I'm going to respect the independence of the Fed and not comment on their policymaking. I will say that they are focused on it, and I do have confidence in the team. It's great that the nominees have been confirmed. We need Michael Barr to get through as well. But we know that they are focused on it. Importantly, the president is doing what he can to complement those efforts. So, for example, he really encourages Congress to pass the bill that would address shipping costs, because we know, again, shipping costs raise the cost of bringing goods in particular overseas or across the country, and it's important that we reduce those costs of shipping. He encourages Congress to work with him to reduce the costs for families, for prescription drugs, for childcare, for energy costs. And importantly, deficit reduction is also deflationary and helps with inflation. And the president urges Congress to work with him to raise taxes for the various wealthiest Americans, for our biggest corporations, because, again, that will help to ease pressures on prices as well.
Dr. Rouse, we've heard some talk about corporate profit making driving the inflation problem. And yesterday we heard the Treasury Secretary, Janet Yellen, at a New York Times event actually address this question. Although she allowed us how there might be increased profits, that was not fundamentally what was driving it. It was supply and demand. Do you agree with that?
I do agree that what is generating the inflationary pressure right now is a mismatch between demand and supply. Again, this goes back to the pandemic when we had to power down the world economy, but our government supported people so they could buy food, pay rent, continue supporting their lifestyles, but our supply could not match that. That's why we see inflation around the world, and even in the EU, they're seeing inflation at historic levels. The war in Ukraine has only exacerbated those efforts. So as supply and demand start to normalize, I am optimistic we will get back to price stability and get back to an economy that is building in a more sustainable, steady way.
I'm curious about what target the White House has for inflation. We know the Fed's target is 2%. Some people think that might be a little unrealistic at the moment, at least. Do you have a target for inflation?
So having an inflation for target is really in the domain of monetary policy, and that is squarely in the domain of the Federal Reserve, which is why it's so important that they be given the independence and the latitude to do what they need to do to address inflation, which has not been the case with every administration. There have been presidents that have wanted to get in the way of the Fed for political reasons. But this president understands that that is what the Fed needs to do, and he wants to be pursuing fiscal policies that are complementary to that.
Everyone is very concerned with inflation. The president's been very explicit. I think he called it the bane of our existence earlier this week. No question. But are there some benefits, actually, from some inflation? We talked with Dr. Paul Romer. You know him. He's the Nobel laureate in economics yesterday. And he suggested that actually there may be some benefits. This is part of what he had to say.
Yeah, this is the hidden and unnoticed true success of Biden's policy, because we've got wages growing faster in dollar terms for the people at the bottom end of the skill distribution. One of the benefits of this period of higher inflation is going to be that we can start to close some of the wage gap and help the people at the bottom catch up.
And Dr. Romer came complete with the chart, as you expect him to, that broke out the wage increases by quartile, showing that the lowest quartile is growing by far the fastest of the four different quartiles. Is this part of White House policy?
So the president has always been very clear that his economic policy making is geared towards building this economy from the bottom up and middle out. And so the fact that wages are growing for those who have not seen significant wage increases for the past several decades is part of his economic plan. What's important is that going forward, that those wage increases are built on a growing economy, that they be sustainable, that they be steady. And so the president understands that that involves bringing down the cost for households, but it also means getting inflation under control. But absolutely, the president's whole economic policymaking is designed to generate greater sustainable economic growth that is more widely shared.
So I wonder, we've heard from you and from others at the White House, we want sustainable, stable growth. What does that look like? Do you have a definition for that? Do you have a target there for what that would look like? A rate of GDP growth or job growth, whatever. What does it look like?
So what that looks like is an economy that's growing because we have productivity increases, because we have a growing labor supply, because we've been making the kinds of investments that we're making through the bipartisan infrastructure law. That the kinds of investments in our physical infrastructure so that we're making goods in the United States, that those goods are productive and that it's efficient that we are doing so, so that the workers who are working are making goods that people want to buy, that they're able to support their families in a sustainable way, don't feel they have to cobble together 2-3 jobs in order to get food on the table and pay their rent, and that we're seeing the kinds of advances that we know we need to be making to address the kinds of challenges we know we have, such as climate change and addressing and being prepared for the next pandemic. So the president's economic policymaking is built on generating and increasing economic capacity so that all workers can benefit, and we have a higher level of what we economists would call well-being. People are well off as they go about and lead their lives.
Dr. Rouse, one more, if I could. You mentioned productivity increases. I've learned from economists like you that there are two ways you really get growth. It's a combination of productivity increases, but also an increased number of workers. Should immigration, legal immigration I'm talking about now, should that be part of our economic policy? Because that actually could lead to sustainable growth, could it not?
Absolutely, and the president has been very forthright in welcoming, having more robust legal immigration. He and his administration have been working hard to reduce backlogs in visa processing, finding other ways to increase the number of legal immigrants, because we know just how important they are for innovation, for productivity increases, and for the health of our economy and our society.
Okay, Dr. Rouse, thank you very much for your time today. Really appreciate it. That's Cecilia Rouse. She's chair of the President's Council of Economic Advisors. Coming up, we go to the Port of Los Angeles for an update on labor negotiations out there. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. President Biden is on his way to the Port of Los Angeles, so we sent our own Ed Ludlow to be there with him to keep him company. And part of the reason is because there is a big labor negotiation pending out there. So, Ed, we're going to go to you now in the Port of Los Angeles. Why is the president going there?
Yeah, I mean, he zeroed in on inflation and the backlog, the breakdown in global supply chains. The Port of Los Angeles here was really case in point that at points during the pandemic, we ground to a standstill in America's busiest terminal. In the background, as you say, you have this impasse between the longshoremen and warehouse workers union and the port operators, which is not unique to the Port of LA. It's something happening all along the West Coast. But the concern is that if they cannot reach an agreement over pay and benefits, that we will see further breakdowns in how this port is operating. Things have improved, but if there's a breakdown in operations, it means that there's a scarcity of containers because those containers are not moving efficiently through the port. And that it has been a direct free through to the inflation that we're seeing now. And we know it's top of mind for the president. A White House official briefs us that that is what his speech on the USS Iowa, just over my right shoulder, will be a little later today.
And Ed, it is dangerous, as we all know, and I particularly know because I've negotiated some labor deals with unions. It's dangerous to anticipate where they're going, how long they'll take. There's ups and downs and backs and forth. But to reduce it to one basic issue, how much of this is employment versus automation?
Yeah, it is both. To be a longshoreman in Los Angeles has been difficult over the last 18 months. There was a surge in demand, a surge in volumes. The way that officials and executives describe it here is that there are 5 lanes of available traffic for container ships to pass through where I am, but there were 10 lanes of volume trying to fit in because the world suddenly became so focused on ordering things. So for a longshoreman, you know, it was not good working environments. They themselves feel the pain of inflation at these levels. They want higher wages. It's interesting, some reporting that a longshoreman in the Port of Los Angeles could earn as much as $100,000 a year with benefits. And so that is why we're focused, because historically strikes, bona fide strikes, have not happened. But we have had standoffs between the unions and the operators that have caused disruption. As I said, that disruption gives real risk to inflationary pressure.
Okay, thank you so very much. It's great to have you with us, Ed, from the Port of Los Angeles. I suspect that was not a longshoreman, it was a motorcycle that we heard there. Thanks a lot for joining us. Coming up, we're going to go from the Port of Los Angeles to the broader issues about supply chains and turn to Bindiya Vakil of Resilinc. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. We've just been talking about the Port of LA, which is one part of a much larger issue involving the supply chain that we've been contending with at least since the pandemic hit us. We turn to now Bindiya Vakil, Resilinc Chairman and co-founder and CEO. We talk to her periodically about where we are in the supply chain. Bindiya, great to have you back with us. First of all, start with the Port of Los Angeles. How integral is that to the supply chain issues?
Extremely. 40% of everything we buy across the U.S. Makes its way into the country through the Port of Los Angeles. So this is a very critical time. Last year, we saw massive disruptions due to the ships that were backlogged there. And now we are seeing those ships that are leaving Port of Shanghai and making their way across the ocean. They should be hitting our ports within the coming weeks. And it's a very critical time for these negotiations to be going on.
So let's assume for the moment that they get a deal done, they come to a contract so it doesn't get interrupted at Port of Los Angeles. Overall, how are we doing the supply chain right now? Are we getting better?
We are definitely continuing to see massive disruptions, especially if you just look at the Resilinc data set. We went from 200 disruptions a week in Q1 to about 300 last month. 87 factory fires alone, which is 5 to 6x the number of factory fires we were seeing prior to the pandemic. So just Shanghai alone, 7,000 sites in our database, making 14,000 products that make their way into just about every product that we buy across our daily lives. And so this is a disruption that is still not over by any means. We're going to continue to see pain ahead in the next 12 to 18 months.
Bindiya, what kind of adaptation are we seeing at various chunks of the supply chain to try to deal with this issue? For example, automation.
You know, automation is just a manufacturing thing. There's labor shortages that we just heard. There are so many different choke points across the supply chain. Many companies, unfortunately, took a wait and see approach to this, questioning the ROI of resiliency or greater mapping or transparency, or really hesitated to change their overall procurement strategies throughout the pandemic, apart from panic buying being the default. And we're now seeing that they're paying for that wait and see approach in terms of raw material premiums, expedited freight. But remember, not everyone has been equally burned by this. There are companies who took a proactive approach throughout the pandemic. They had mapped their supply chains multiple tiers deep, continuous monitoring of disruptions. They were giving their supply chain an information advantage. And now what we're seeing, there's a recent study from Gartner that showed that 73% of companies are now looking to invest in greater transparency, supply chain mapping in the next 2 years. We're certainly seeing this demand hit Resilinc. We tripled our team in the US and are raising our growth round. So we're definitely seeing companies are realizing that ditching JIT or onshoring or second sourcing everything are very expensive strategies. And we need the information advantage to manage the supply chain across so many different ranges of disruptions coming at us.
You said companies are investing. Investing is one word for it. Spending more money is another. In order to fix the supply chain over the longer term, is it necessarily going to increase the cost?
Temporarily, we will see some companies invest in strategies like onshoring or JIT or just in case inventory levels, but those have a massive price tag. You know, onshoring a factory can add billions, hundreds of millions of dollars in costs and investments. Adding a warehouse and stuffing it full of inventory is hundreds of millions of dollars. But mapping your supply chains, working with suppliers collaboratively with greater transparency and trust and coming together to solve problems in real time. The price tag of that is hundreds of thousands of dollars. It's attainable, it's definitely affordable and scalable across 40, 50 different types of disruptions. So I don't think that cost is as much of a problem as onshoring or inventory, changing your inventory strategy is.
In between onshoring and what we've been doing in the past is something called nearshoring, I've learned.
Right.
Are you seeing shifts toward things like Mexico as a place to supply out of?
Absolutely. In fact, south of the border, just about everything that you can think of, the capacity is already gone. In September of last year, I co-authored an article with some of my colleagues on the Pan-American supply chain, looking at countries like Honduras, El Salvador, and others, where There's cost parity on labor with China. There's also, we are connected by road, so we could avoid the port completely. We could create greater partnerships and trade agreements, and we're definitely seeing companies look at this region piggybacking on the experience of the apparel and food industries to create that land-based supply chain closer to home.
Okay, Bindiya, it's always great to check in with you on the supply chain. You're so informed. That's Bindiya Vakil of Resilinc. Check out the Balance of Power newsletter on the terminal and also online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk with former Democratic Congressman of New York. He's Joe Crowley, about the first hearings of the House Select Committee on the January 6th riot at the Capitol. What did we learn? What will we learn? This is Balance of Power on Bloomberg Television and on radio.